Good afternoon, everybody. I'm going to talk today about a service which is changing the world. It is a service which is transforming the economies of the emerging countries. That service is mobile money. I mean, we take for granted that the financial services we access, including basic bank accounts. But for millions of people in the developing countries, their life revolves around cash. And these are wage earners, small businesses who get paid in cash and are often forced to save their cash under the mattress. According to the World Bank, there are at least 2 billion people who don't have access to bank accounts. And so these people use cash for all their transactions. And that means they can only buy goods and services from someone who is close to them. In some countries, you need a wheelbarrow to move something, an amount which is equivalent to about $100. So enter the mobile phones, and a lot of these 2 billion people have access to mobile phones. And these mobile phones are enabling these people to access financial services for the first time. And so these people have access to, can use these mobile phones to set up an account where these services have been launched. And mobile money simply means somebody is using a very basic feature phone like Nokia to have an account. And the mobile number becomes their bank account. And these are services that are growing quite fast. In 2012, there were only 30 million active accounts. 2 years ago, there were 60 million mobile money accounts. In last year, those numbers increased to 103 million mobile money accounts. And these are services that are truly transforming the economies of these countries. And some of those economies are becoming truly cashless, where people are no longer using cash to pay for goods and services or to transfer money to someone else. The transactions involved, I mean, many of you probably know the most popular mobile money service, which is M-Pesa, run by Safaricom. But a lot of the big players we know, like Vodafone and so on, have set up these mobile money services. And across the world, there are around 261 mobile money services. And these are not phenomena. These are not only available in Africa, but across the world. So we have mobile money services from Paraguay to Pakistan. And the transactions involved are quite large. Currently, there are 500 million mobile money transactions conducted through mobile phones. And the amounts involved are about $7.5 billion, which is not particularly huge, but these are volumes that are growing very fast. And mobile money services are largely domestic, so these services like M-Pesa in Kenya, EcoCash in Zimbabwe, services that are available, that people use to transfer funds. But international remittances, which for some of the countries that have mobile money could account to up to a third of their GDP, are still cash-based. So you're talking about 95% of international remittances being conducted on cash. So somebody going to a corner shop, say somewhere, a place in London, and a recipient going to another corner shop to collect the funds 2 days later. And so this is the kind of image we associate with international remittances, despite the fact that in the receive side, economies of, mobile money is becoming widely available. So this is now changing, and so players like WorldRemit are now enabling senders not to queue up at the corner shop, but to download an app that enables them to send money to a mobile wallet. And it's important to, and mobile money is addressing one of the perennial problems in the international remittances, which is about the audit trail, traceability of transactions. As you probably know, a lot of money banks have exited from this industry. In 2013, Barclays have shut down 250 bank accounts of money transfer companies. And the reason is to do with the fact that this is a largely cash-based industry where migrants are using cash to send, and the cash, it's difficult to trace cash. And so mobile wallets are changing that, because with a mobile wallet, it is possible to track or obtain an audit trail of the transaction. And mobile operators that have launched these services have a wealth of data that banks normally don't have. So law enforcement agencies, regulators can't get those details, what is they need if the transaction becomes suspicious. And you don't want, what worries the regulators and banks and the compliance officers is that they don't want the money to end up in the hands of these guys. So that is a major concern, which is leading to a lot of players exiting from, the banks exiting from this industry. And the availability of cheap smartphones is also accelerating this growth. And we're talking about sub $40 smartphones made in China and India that are becoming widely available in the emerging economies. And so that is also giving access to the users of these services additional features, and the use of mobile money becomes easier when somebody gets access to a smartphone. And that's why you have a large number of people in the switching from cash to these mobile wallets. This is an example of mobile money we've partnered in Africa, EcoCash. It is one of the most successful mobile wallets like M-Pesa, mobile wallet with 5 million subscribers. And so Zimbabwe was one of the countries we've been sending money to for the last 4.5 years. I mean, the cash pickup has been growing. But as soon as we introduced mobile money, you can see that how it has overtaken cash pickup. And the reason is simple. Recipients who used to travel to the main city to collect something like $100 used to pay around $20 of transportation costs to get to a main city. These recipients are now getting their money on a mobile wallet, and that is free, and using the mobile wallet to pay for goods and services. And so even remittances are changing from largely cash-based transactions to mobile to mobile, where a sender can download an app and then transfer money to a mobile wallet in somewhere in Africa. And I think that is a lot more important than, I mean, when we talk about mobile money, we often confuse with mobile payments, things like Apple Pay, which certainly gives us additional convenience, but those are not as transformative as mobile money in Africa, where an entire economies are becoming cashless. I mean, I come from, probably many of you don't know, but I come from a country called Somaliland, which used to be a part of Somalia. There is a mobile wallet which was launched a couple of years ago. And today in the main city, it's something like 90% of transactions happen on that wallet, or probably more than 95% of the GDP for the particular main city takes place on that wallet, where if you can find people who live in that city who have not touched cash for 6-7 months. So the wallet, the mobile money is widely accepted, and it has truly transformed the economy, where all of those transactions used to take place within a cash setting, where it was difficult to measure the movement, the activities of activities, because those were largely in an informal setting. Today, it is possible to measure the GDP of the economy because of the fact that everybody has got a wallet. In Kenya, where you have 45% of GDP going through M-Pesa, a large part of the informal economy have now switched to formal. And as a result of that, the government in 2014 revised the GDP upwards, because the government realized that the economy was much bigger than it has realized so far because of the availability of mobile wallets. And so that's how mobile wallets are transforming, and to a large extent also reducing risk is associated with the use of cash. Cash, particularly in tough economies where you have wars and so on. And it's the same reason why a lot of the terrorist organizations have banned mobile money, because they like cash, where traceability is quite difficult. Thank you.
So Ismail, we're at a stage where smartphones are coming down in price. You can now get a $30 smartphone. So the feature phone era is gradually coming to an end. What difference is it going to make when everybody has a screen which has apps that anybody can create?
I think what we see, I mean, that is what is already, we can see what mobile phones have done in the emerging economies. I think, as I said, some of the new solutions, like Apple Pay, have certainly improved our lives, have helped us, but they are not as transformative as what we see in the emerging economies. I think what that will do is certainly further reduce the reliance on cash, for instance, where there are a lot of costs associated with cash. And according to the National Crime Agency in the UK, something like £1.5 billion of proceeds of crime go through banking and money transfer industry in the UK alone.
That's the business model that our banks have at the moment.
Yes. So I think the adoption of smartphones in particular could help us cut some of those kind of financial crime, which is largely associated with the absence of audit trail, anonymity associated with cash and so on.
And what's the next step of growth for WorldRemit? What do you see as the next big opportunity?
It is undoubtedly mobile money. I mean, we have heavily invested in connections with mobile money operators. So we work with the largest mobile money services. And in December 2014, we had about 20% of the international remittances of going to mobile money wallets, and with the largest player in that space. I think much bigger than Western Union, which is the dominant player of cash to cash.
So you don't take out quite as much fee as they do.
Yes, but I think in the emerging economies, really the costs and the charges we hear are mainly on the cent side. But there are charges associated with traveling from a small village in Africa to the main city, where you may pay up to $20, as I said in Zimbabwe. I think the mobile wallets provide a convenience and then save the transaction costs associated with that, which usually we do not see when we talk about the cost of sending money.
Thank you for joining Wired Money and sharing your story, Ismail.
Thank you.